What's up YouTube, and welcome back to our ForexPropFirm.com YouTube channel. I'm your host Valentine, and today we are going to dive a little bit deeper into our trading educational content. This is the video number 3, and I'm going to talk about the creation of a trading plan, which in my opinion is one of the most important things that we are going to do as a trader, besides having a trading journal. But that's a topic for a different video. Okay, let's dive into that. A trading plan plays a huge role in providing structure, discipline, and consistency for you as a trader. I'm going to show you how and why a trading plan helps to stay focused on your goals and manage risk effectively. Definitely need to make sure to have something to measure, which is a little bit more about the journal, because there you can write down your thoughts and what you were expecting and what price did afterwards. But in my opinion, the trading plan is the baseline for everything you're going to put on top of it and for yourself on the journey to becoming a profitable trader. Okay, so now I'm going to show you my screen. As always, there's something I write it out on my trading view. What I'm going to show you here are the most important points in my opinion, and after that I am going to show you the trading plan on an internet site, and you can go step by step through that, so definitely stay tuned for that. Okay, first thing I already mentioned, that the trading plan is one of the most important things to have as a trader. The second thing is, when you don't have any rules in place, you're definitely going to mess it up sooner or later. And that's 100% true. If you don't believe me or not, just try for yourself and see how it's going. At the start, I didn't have a trading plan myself, and I definitely messed it up bad. At first, sometimes I got lucky and I had a good trade and I had a winning trade and I thought, oh, I must be so good. But at the end of the day, I just got humbled by the markets. And in my opinion, this is going to happen to everyone sooner or later that doesn't have a trading plan in place, that stops yourself and especially your mind that's always messing up with yourself, or trying to mess up with yourself, I should say. Sooner or later, you're definitely going to fail if you don't have something in place. Okay? So the first step would be to start to define what you want to see in the markets prior to taking a trade. That is a really important point. Think about that, guys. Think about what you want to see in the marketplace prior to taking a trade. And think about the words and what I mean by that. In my trading plan, I have a really good structure, what I want to see for myself to validate if I'm going to take a trade or not. Let's say, if A is not going to happen, I'm not going to take a trade. And that's just it. One thing it does for me, it improves my discipline as a trader, because if it's not going to happen as I expected it to be, I'm not going to take a trade. And the reason for that is that I'm either offside with price action or that I had a wrong read on price. But in this case, I'm not going to take a trade and I'm not going to lose. So which is based on my trading plan, and you see what my trading plan is doing for me. I'm going to outline it prior to my trading sessions, what I want to see. If I don't see it, I'm not going to take a trade. Easy, okay? It sounds easy, but in my opinion, it is when you have a good structure in place. So the next thing would be backtest it and look in your journal what you see happening over and over again, because it's different from myself. Then your trading is completely different as well, because as I typed out here, it could be a classic ICT buy day, for example. That's one thing I am trading. Okay, so look at the charts and see what plays out over and over again, and especially what you're seeing, because I have different eyes and I'm watching price with different things. And you need to make sure to definitely watch out for the things that are sticking out to you, because that's special for you. I'm different as a trader and you are completely different. That's the reason why we all have different trading plans. As I said, matter of fact, it's different for everyone. Don't try to copy the trading plan of someone else. And don't try to copy my trading plan, because I can lay out my complete trading plan for you here to see. And to be honest, you won't have any benefit of it. Why? Because it's not your trading plan, because it's my trading plan, and you won't benefit from that. So when I started out, my mentors always said, you need to have your own trading plan, create it for yourself. And I got a little bit pissed off because I thought, yeah, just give it to me, lay it out. But at the end of the day, it really would not have made a difference to me, because over the years, you're going to switch up your trading plan a little bit. Maybe there are some things that are not working in the marketplace anymore and you're going to cut them out. Or maybe there are some things you're noticing that you're going to put in. So it's really different, and you can't say that's the 100% way, okay? Now you can define your trading plan even more. Lay out when you're trading, how much leverage you're using, what your target is. That are really important points. I'm going to show you later on how you can define them. Think about that. There are so many different levels and topics to that. I really can't talk about everything. I'm going to show you the structure, how you can go through that. And at the end of the day, try to simplify your trading plan. Why? Because my mentor once said, you need to put it on the back of a credit card. Because so it's easier for you, and at the end of the day, it's fresher in your mind as well. Because if you have a trading plan that consists out of 100 things you want to see prior to taking a trade, chances are high you're not going to take any trade. And what my experience is, when I started out, I laid out everything. There was like 15 to 20 points. Guess what? I was not going to take a trade because I wanted to see X, 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 X. Sometimes there was only XX, and if I would have taken the trade, it would have been a winner. But I was doing so many things I want to see in the marketplace prior to taking a trade that I really got confused because it was just too much. So simplify it and focus on the basics is one of the best recommendations I can give you. And you will see for yourself if you have a trading plan or if you're going to create one. What I said at the end is the most important thing, to just try to simplify it. If you guys already have a trading plan, let me know in the comments what you're guys looking for, but because you can tell me what you're looking for, and it could 100% be completely different than mine, but at the end of the day, you're still profitable. And that's a really important key for you guys to understand. You don't need to copy any trading plan of someone else. Go and create your own one. Go and create or go and find the things you want to see. Okay, now I'm going to show you what I found, and I was just typing in creating a trading plan, okay? And I'm here on this page, investopedia.com. I just typed in trading plan, okay? It really doesn't matter. 10 steps to building a winning trading plan. If we go down here, I'm going to go over the points. Maybe I'm going to expand a little bit on it, but at the end of the day, these are the basics, okay? Number one, goal definition. Firstly, if you are new to trading, you should determine financial objectives, risk tolerance, and time horizon. These items need to be clearly articulated to ensure that your trading activities can be achieved. At the end of the day, if you don't have a target in mind, how are you going to achieve it? Definitely lay out what your goals are, I am not recommending doing daily or weekly percentage goals. I'm more talking about long-term objectives. What do you want to achieve through trading? Okay? Really expand on that and really have a clear why, because your motivation is definitely going to be higher if you have that. Okay? Number 2, trading style selection. Trading style needs to be identified. The style should reflect your personality, culture, and preferences. The plan can include day trading, swing trading, position trading, or long-term investing. The chosen style should align with one's goal and time availability. At the end of the day, it really matters when you're available to the charts. If you, let's say, you're up at night, for me, as a European time, Asia would be in the middle of the night. If you're working night shift or you're living, I don't know where, and you need to trade Asia, go for that. And really be intentional with the time, or let's say the time availability you have, because you don't need to lay out a trading plan for a New York session if you're only available for London or for Asia. So think about when you're available and think about the things you want to do. Let's say you're a day trader, swing trader. Get really clear about your personal style and your time availability. Number 3, strategy development. A detailed strategy needs to be created. The strategy outlines an approach to the markets. Also, a criteria for trade selection needs to be defined. This can include technical indicators, fundamental analysis, or a combination of both. Finally, when building the strategy, entry and exit tactics, risk management techniques, and position sizing rules needs to be specified. Okay, what that means is you really need to be clear what you want to see. Is it, let's say, if you're an ICT trader, you're going to need to watch out for fair value gaps, let's say, okay? If you're a support and resistance trader, lay out the foundation of every strategy and lay out what you're going or what you want to see. Because I am an ICT trader, there are 1,000 different things you can do. There are order blocks, there are fair value gaps, there are breakers. Be really clear and specific about what you want to see. For me, I'm only trading fair value gaps. So I define my trading plan only based on fair value gaps. I really am not looking at order blocks or breakers or any other stuff, because at the end of the day, these are just distractions. Focus on the most important things for your strategy. Number 4, realistic expectation setting. Trading is not a guaranteed path to wealth and involves inherent risks. Realistic expectations for returns need to be set and the potential for losses needs to be recognized. You should avoid the trap of chasing quick profits or risking too much capital on a single position or trade. I'm always emphasizing this point, even in the interviews we're doing, because risk really doesn't matter. Stick to a small risk amount and do not try to make big money with one trade, because if you think about it, you're not going to be a millionaire by doing one trade with 50% risk on a challenge account. That doesn't matter. It's the small things that over the long term are going to add up. It's the small wins that are going to add up. So don't risk too much money on a single trade and put it in your trading plan. How much are you willing to lose? When are you willing to lose? These are all the questions you need to ask yourself for creating your own specific trading plan. Number 5, comprehensive market analysis. You need to conduct through market analysis to identify potential trade opportunities. If they are part of your plan, analyze charts, market trends should be studied, news and economic indicators have to be monitored. Take a step back and consider the overall market condition. As I said in the trading tips number 2, take in consideration the economic releases because they are really important. It depends on your style if you're going to include it or not, but definitely be aware of them. because as I said, you can get slipped, okay? Number 6, risk management rule development. In order to protect capital, risk management strategies should be implemented. Allocate a percentage of your portfolio for each trade and don't go above the amount you have determined is risk for your account. This amount should be equivalent to the amount that you are willing to lose per trade. Make use of stop loss orders to limit potential loss and establish clear take profit targets to secure gains. Back to trading tips number 1. Set a stop loss. Risk management. The most important thing as a trader, because that is all you can manage at the end of the day. Before you take a trade, you can calculate your risk and then stick to it. As easy as it gets. Yes, traders, our goal should be to be good money managers. We are going to make more money if we are able to keep the money we have, okay? If you know what I mean. Because a trader should rather focus on protection of an account rather than making big gains. Because the best trade is the trade you did not take, which is equivalent to not making any loss, if you know what I mean. So risk management is definitely very important. Number 7, trade management plan. Determine how you will manage open positions. You should determine when to adjust stop loss orders, take partial profits, or exit the trade entirely. Talked about that in number 1 as well. If you are in a good profit, set your trade to break even to not let a winner turn out as a loser. Okay? Number 8, trading discipline maintenance. Once you have written your trading plan down, stick with it. Avoid situations where you abandon your trading plan impulsively because the market is doing something that elicits an emotional response from you like fear or greed. Train yourself to embrace discipline and consistency when executing and exiting trades. That's really important. Write down your trading plan, have it somewhere you can see it every time you're on the charts, and make sure to be really aware of it. If you need, make it as a background on your MacBook. I don't know. I once had my trading plan written out at the back of my MacBook and I always had it with me. And prior to taking trades, I was always going to the things I want to see to make sure I'm not caught off guard by the markets. Number 9, monitoring and trade evaluation. A detailed record of trading activity, including entry and exit points, reasons for taking the trade, and the outcomes are essential. A frequent review and evaluation of trades is necessary to becoming a good trader. The evaluation and review of your past trades will allow you to identify patterns, strengths, and areas for improvement. That, in my opinion, is the most important part. Because when you're doing that, or let's say you have a trading journal where you put everything down. I myself, I use Notion and I get everything just clean setting up, and I can see my progress over the time as well, because I'm doing a daily hypothetical analysis, what I want to see in the market, and in the evening I'm doing an end of day analysis, and then I can compare both of them. What was it that I wanted to see? Did it play out? What went well? Ask yourself these questions, because by doing that you're getting better every day. Because one trading day really has a lot of information. You can learn a lot, and you can learn about your behaviors as well. But you can only learn that if you're going to write it down or you're going to collect screenshots. Okay, I can show you a little bit of my trading journal at the end as well, so that you guys can imagine how it should look like. Okay, number 2, continuous education. Number 10, sorry. Stay updated on market trends, economic news, and new trading techniques. Read books, attend seminars and webinars, follow reputable financial news resources, and interact with experienced traders to enhance your knowledge and skills. That is exactly what you're doing. Congratulations. You're here because you're learning. Definitely make sure to get better every day and to learn new things every day. As I said, make notes on the videos that I'm doing for you, expand on the knowledge, if you want to ask, feel free to ask questions in the comment section below, and then I'm going to go back to you, because that is really important for yourself to grow as a trader and to even learn new things. Okay, so that is it for these 10 things. I'm going to show you my trading Notion journal. Okay, so this is my trading journal. I have a weekly intention here. I have a London and New York timer. When we click on daily hypothetical analysis, you can directly see what my thoughts were at the start of the day. I have screenshots here, dollar, of the news releases, lower time frame, euro dollar, and that was what I wanted to see. And now I have hypothetical situations. I typed out what my explanation for the analysis is. What do I need to see to take a trade? Mental check-in. Then I have a post-trading day screenshot here as well. And then what's really important, end of day roundup. Was my pre-day analysis correct? Have I taken any trades that met my plan? Have I taken any trades outside of my plan or made any errors? Which is really important, because by doing that, you're able to learn. What can I take away from today? Whether technical, price action, or mindset specific. Brief conclusion of how I performed today. And I'm going to rate my performance here. I can type in, let's say it was an 8. Okay. And then it's going to be here. So that is one thing how a trading journal could look. As you can see here, monthly stats, March, I only took one trade, which is why I have a 100% win rate there. And yeah, that's it for the trading journal. You can really expand on that a lot, because there is really a lot you can do with Notion. In my opinion, it's one of the best opportunities for a trading journal in general. And yeah, we talked about the creation of a trading plan. Let me guys know if you already have a trading plan, or if you have any difficulties creating your own trading plan in the comments down below. That is it for the episode today. I hope you found this really insightful and you took a lot of notes. Please leave a like and subscribe to the YouTube channel to stay updated on all our latest trading news. And until next time, happy trading.